Morning, Evil. Morning, FTNet. Morning, Jury. Morning, Mark. How we doing? Morning, Jules. Evening, even, Jules. Morning. Everybody's morning apart from Jules. And Vitali. How we doing? Right. Just going to kick off with the usual stuff. So just trading the indices at the open, and we'll have a quick look through the news and stuff. And Mark is in the evening as well, eating dinner. Weird. Just had breakfast. So we'll go through the news, have a look at what's happened with the markets yesterday quickly. But this morning we'll have a look at the strategy that I can't even remember who put the strategy up. Who was it? Callum. Yeah. Outro. Who's not here? Morning, CK. Or if he is, he's being quiet. So we'll have a look at that strategy that is one of the transparent traders strategies this morning. So I've built the EA to model it. I did some basic testing on it yesterday. It's a little bit wishy-washy, to be honest, the rules. We'll have a quick look at the rules on it. Yeah, it's a slow burner. It does seem profitable, but what I want to do is test it on other FX pairs, really, to see how it works on other pairs. But it is literally just the London breakout strategy in a different form, which is fine. Nothing wrong with the London breakout strategy, but every version of the London breakout strategy I've ever modeled has never been profitable. But every version of the London breakout strategy that I've ever modeled is an intraday strategy. This is not an intraday strategy. It's a stop and reverse multi-day strategy. So it's a different play on it, really. Which is fine because it lets the market move. So we'll have a look at it and see how it plays out, basically, and see if there's any ways we can improve it, really. There's also another breakout EA that I've been working on for a while, and I thought while we're testing this, it's worth having a look at that. So I've got an EA that's been sitting kind of on the back burner a little bit, which is a variation of the opening range breakout strategy, but I wanted to do a load of research into the same strategy for forex. The problem with forex is there isn't an open, it's 24/7 365 or 24/5 365. So when you look at an FX pair, it doesn't have an open. You can't say 8 o'clock is the open, or 9 o'clock is the open, or 8:30 or whatever. Some days it will go at 7, some days it will go at 9, some days it won't go until the afternoon. Yeah, it's completely random, the open. Most of the time it's somewhere between 8 and 9 in the morning is generally when you start to get volatility come in. But with FX you can't say a specific time. So this is partly why the Asian breakout or the London breakout strategy isn't particularly reliable, because the range that you form is never necessarily the range at the open, which is why that is its Achilles heel. You can't do it. Whereas with the opening range breakout strategy, we know dead certain every single day at exactly the same time of day, this thing opens with a large volume. That's the whole purpose of this strategy, and it's difficult to apply it to FX, but there are ways to do it. So I built an EA to develop and test that theory and get statistics on it, but I've never really gone too far with it. So today might be a good day to sort of revisit that, and it's something we can maybe look at. So markets have opened. Looks like I'm going to hedge on the FTSE this morning. DAX is trying to break long. It's quite a big pre-market rally on the DAX this morning. So we'll see where these go. Bad day yesterday. 3 hedges yesterday, 1 win. So made on the US session, I made about £200. Lost 600 in the morning on the European session. Couldn't get anything moving yesterday. It was terrible. We basically got a 3 ADR up, 3 ADR down. And actually it was at 1 ADR up, 3 ADR down. Rotation day yesterday on the DAX. And as you can see, it was a rotation day on the FTSE. Very hard to make money in those because there's no momentum. So nothing you can do. Right, so news-wise today, we've had unemployment change this morning for the Aussies. That came out worse than anticipated. However, the unemployment rate hasn't changed. So with that, basically, we can just stay as normal. Nothing particularly exciting to report there. I doubt very much the Aussies are going to pay much attention to it. There's no ADRs so far today on the Australian pairs, if you whiz through them. We've had a bit of a down move, but nothing dramatic. So it's bad news in the fact that the unemployment change has gone the wrong way, but the unemployment rate hasn't changed. So it's no news, basically. So nothing to report there. We've got PPI today. So CPI yesterday was a bit of a letdown. We didn't get anything negative on the CPI. We didn't get anything positive on the CPI. The US dollar's continued a little bit of strength yesterday. We've broken out into new highs on a few areas. PPI today could completely unwind that entire thing. So the producer price index feeds into the consumer price index, which feeds into interest rates. So this drives that, which drives the other. So if this all comes out as negative, it will mean likelihood of that dropping on the next report, which means the likelihood of more pressure to drop interest rates. However, by the time that kicks in, we'll be getting into Trump entering the White House. Who knows what's going to happen there? So so that's your news this afternoon. PPI is at 1:30. That's an hour before the market opens, so be aware if you're trading the indices this afternoon. We've got Lagarde speaking later. We've also got Powell speaking and Bailey speaking. They must all be speaking somewhere. Sovereignty Awards in Paris is Lagarde. That's a Federal Reserve event. And that's Mansion House dinner in London. Okay, so basically they're all speaking independently. It's not an event, all within an hour, coincidentally. So pay attention later. Basically, we'll see. We'll have a look tomorrow at what's come out of that. But that's this afternoon's news. Overnight wise, not a lot. I haven't had a quick. I just want to quickly scan through. Just to see if there's any talk about intervention yet from the Bank of Japan. I didn't get a chance to check this morning. $156 now US dollar yen. 30-year bond. Japan considering holding special session on diet on November the 28th or 2. Okay. That's financial news. Japan considers calling an extraordinary diet session. Reports Asahi. Isn't that a beer? Okay. So yeah, nothing exciting basically overnight news. Morning travel. So yeah, nothing particularly exciting to report there. So my exposure on the position trading at the moment, New Zealand dollar, US dollar is a new position, which has just gone on this morning. So that is an H1 RSI extension off. Oh, look at that support. Some level I've just drawn in has just been hit. There we go. So good looking support bounce going in at the moment. Previous resistance, previous support, very strong level. So first entry going in on that. I'm not going to put a TP on that. I'll just see how far it goes. So good looking entry there, H1 RSI extension long. And the swaps are good. Swaps are cheap. So that's my exposure at the moment. Nothing's moving. I haven't got anything on anywhere much. So I took another US dollar trade this morning on Aussie US just to bring the average down, or the EA did. So just looking for a push back up on that one. That's got 2 positions on. Everything else is just kind of flat at the moment. So just TPs on that. Let's stick the TPs up under there. Right, so that's your news overnight. Not a lot to report there. There's no ADRs this morning to look at. There's no RS. Well, there is RSIs. Few RSIs actually on the 4-hour, but mostly US dollar. So nice big reversal starting on that US dollar. Yesterday we didn't get that pullback. It rallied through, looked like it was starting to drop, and then it pushed back up again into the highs. So we closed at the highs yesterday. This morning we've rallied out. So we'll see. This US dollar's on fire at the moment. It's not stopping. US dollar Swiss running to resistance. So that's that level I was talking about yesterday. We're getting some limit orders triggering at that level, which I thought we would, but it's whether or not the limit orders hold. So US dollar yen, obviously that's out in new highs now. 156 level now touched on that. So we're getting to the point where they're going to start moaning. Pound US dollar is the biggest extension at the moment on the 4. So very big extension there. Good looking opportunity for a long. Just coming down to support on that as well. So this area we looked at yesterday. So somewhere around there, be a lovely entry if we can push down a little bit further today. But that is extended on the 4 hours, so it's a good looking long opportunity. Bit expensive to trade long at the moment though, so not one that I'm getting into myself. Right, so let's have a quick look at these strategies. So DAX clean break, messy break on the FTSE, but not hedged. So could do with a nice clean break today. We got yesterday's high at 2R. I'm just going to move my TP down to yesterday's high, just because I'm going to be talking and not concentrating. So I just want to bank something on it this morning, ideally, just in case that FTSE hedges. Right. So, quick look at this strategy. Quick update on the strategies that we've got running. I haven't even looked at them this morning, so this is new to me. You're finding out at the same time as I am. Right, so that's a position trading account. Okay, so this is the fib pullback account. So yesterday we made an $82 loss, $181 the day before. So it's down 263, roughly 1%. That's fine. It's sitting at the moment in profit on a couple of trades. There were some really unfortunate entries that were missed on this. This one here yesterday, yeah. You can see this big push up that we had. The entry was here to go long, and it just missed the entry yesterday, and it's gone straight up to target, above target basically. So really unlucky that we missed that entry on that one yesterday. That would have been a beautiful profit, but it missed it, so it didn't take it. So triggered long, missed that one as well. Look, just missed it. Look at this, so unfortunate. It's missing some of these pullback entries, and we're only using 20% to try and get into these. So no entry on that one. CAD yen, we've got a buy limit sitting on CAD yen. Again, this candle here is spread, so didn't trigger an entry. The trouble with this, all of these strategies, is the swap. Which brings me on to something else I was going to discuss this morning. When we look at the other strategy, I'll explain it. New Zealand yen, so we've got a sell on that one. So we managed to get a sell triggered on that one. So pull back, trigger entry, TP's all the way down there. Obviously that started trailing, so the stop loss was there above the high. It's already started to trailing, it's already reducing the risk down. So that's got a good chance of making some money today. We've also got pound Swiss on. So that's triggered a sell. And euro yen, which is it's already blocked in profit. Look, so this one here was pullback entry yesterday. So it's triggered the long. Target is up there. Stop loss was down there. We've already moved up, so it's already trailed into profit. So that's guaranteed locked in profit. So that's going to bank something anyway. So got to give these strategies a week or so to play out. If you go and look in the back tester and actually back test all of these strategies that we've got live trading, you'll see that day by day, there's many days where it just makes loss after loss after loss, and then it recovers all that loss, and then it goes to make profit. So, you know, you got to bear in mind when you're live forward testing strategies, what happens in the back tester. In the back tester, you might have an equity curve that looks like that, but there's a hell of a lot of going sideways. There's a hell of a lot of dips which last for days on end. There's a hell of a lot of week-long dips as well. So just because it's put in 1% a loss, it's all part of the process. It's all within expectations. It's just not making money every day, which is the way trading works. So that's triggering fine, working okay. This is the lazy trader strategy. 3 profitable days in a row. Forget the money because it's risking a fixed lot size, so it's not adjusting lots. It's triggering as it should do. So we've got a minimum distance of half an ADR between trades. So ATR is 40. That's 40 between the two. This one's massive distance between the two because it was a huge down day. That was 3 ADR. Is that right? Pound US dollar. Do we have a 3 ADR? We didn't have a 3 ADR day. Oh, we're using the 4 hour, aren't we? Yeah, sorry. We're using the 4 hour time frame, not the daily time frame to measure that. So those distances are all fine. So 3 profitable days. It's sitting in some drawdown at the moment. It's banked 2%. We're sitting in 1.2% of drawdown. We've got 4 trades on. 3 of those are singles, which means that they can easily hit target very quickly. One of them is a position. So the whole purpose of this strategy, isn't it, is we're going for small scalps, quick scalps. At the end of the day, we're taking a trade. We're looking to just get out on a quick pullback before the next day's candle, and the next day's candle can go wherever it likes. We just want it to pull back a little bit before it decides. So those 3 could easily hit target today. We've got one that's turned into a position. So if it doesn't work out, we turn it into a position trade and we get it at a break even. So New Zealand dollar, US dollar is there. So entry, there's the exit. Obviously, that can easily hit that today. We've got Aussie dollar, New Zealand dollar, which is there. So again, not looking for anything dramatic, just looking for a quick pullback leg. So that could easily go down, couple of hours of candles and you've done target on these. Pound Swiss is in profit, but not much, on its way to target by the looks of things. There we go. So Pound Swiss, we're just looking for that quick scalp up. So just looking to put in some kind of pullback if we're going to continue down. So this strategy is looking pretty good. Nice 3 days on the trot, banking money. The overnight scalping strategy, Vitali. Huge loss again, 2 days in a row. We had a winner. We've had 2 big down days. Yeah. We could let's have a quick look, quick scan through at these, and just see what's happened overnight, where the trades are. So there's one there. Euro odd. So that one hit target. This is the trouble. So this is the trouble with the strategy. Can't see the P&L, can you? So this is the issue with the strategy. So today's trades are here. So the one I've got highlighted is the first trades of the day. Yeah. So Euro odd, short, target, lovely, brilliant. So straight to target, $176. Euro New Zealand, straight to target, $178. We made a loss on the pound yen of 132, pretty much a break even on the pound US dollar. We've got 3 small profits there on the US dollar Swiss, the New Zealand Swiss, and the US CAD. So overall, we've got 1, 2, 3, 4, 5, 6 trades. Sorry, let me do it again. 1, 2, 3, break even, 4, 5, 6 trades which either broke even or made a profit. We've only got 2 trades which made a loss. So strike rate, bloody good. Equity curve, good. Yeah. The problem is, look at the losses. 132, acceptable. We've had 178 win, 176 win, and a load of 60s and 70s. But we've got this whacking great loss in here on the pound Swiss of $846. Wiped out the day, totally. So let's look at that one. Pound Swiss. And this, herein lies the problem. Shorted. Executed stop loss. Price has got nowhere near it, but they spread it. You cannot avoid this. Every broker on the planet does this. It is the overnight spread, the overnight swap. This was swapped like that, spread like that. So we took an $800 loss on this, and price never got anywhere near it. On the back tester, the 2-hour exit was there. This was a profitable trade. In real life, they spread it. So this is the problem. So what needs to happen with this strategy, and this is what I thought was going to happen, you know, this is what I said, isn't it? These strategies on paper look great, and there's loads of EAs like this that look great in back testing, but in real world trading conditions, it's impossible to get these orders done. So this strategy, I came up with a variation on this, which we can probably look at, which is not doing it here. Yeah, doing it at another point in the day. So looking at a normal day, obviously these are hourly candles. Yeah, so that's just a, you know, they're criminals, basically, brokers at the end of the day, aren't they? You've signed a contract with them to tell them to execute your orders at the best price available. At 2 o'clock, that was the best price available. Prove me wrong. That's basically what the broker will say. Sorry, that's the best price we could get you. Sorry, we haven't got data about the liquidity pools at the time. That's it. This is what they do. So the other thing you can do with this strategy is it's going to work the majority of the time, but sometimes it's just not. So we could look at only executing this during high volatility periods. So there's other things we can do to trigger these entries. Picking a different time of day. So we could say basically at the open of New York session, pick an FX pair and do that sort of thing with timed exits. But trying to run these strategies with this window is not going to work. The other variation that you came up with, Vitaly, which was executing the exit after 4 hours, the back testing that you've given me on that. So for those who don't know, Vitaly gave me a spreadsheet. Where's it gone? Here. So Vitaly's done some testing basically on this with various pairs, but testing different exit times. So the exit time, rather than being 2 hours, being 3 hours, 4 hours. I think you just tested up to 4 hours. Oh no, up to 6 hours. So a lot of these tests work as well, and produce. And again, I can't stress this enough. A return on drawdown ratio of 32 is unheard of in trading. As soon as I see something like that, alarm bells are screaming at me. You ain't going to get that. No one gets that. If that was achievable, everybody would be doing it. You don't get a return on drawdown ratio of 32%. Just doesn't happen. Of 32, basically, not percent. And when you flick through all of these, yeah, 12s and things, the average return on drawdown ratio for a healthy, profitable equity curve is 4. These are in double digits, all of them. Something's wrong. So there's something wrong here intrinsically with this strategy. I can't put my finger on it. 53. This had a drawdown of $1,500 and returned 83,000. 138 grand return off of 2,700 drawdown. It's just not possible, right? So there's something wrong here, and I can't put my finger on what it is. But yeah, I need to do a bit more testing on this. This exit time being 2 hours is where you're getting these ridiculous numbers. So I think if you filter out the 2 hour and go, okay, we're only going to use minimum of 4 hours. So I'll get in at 9 o'clock UK time, and I'm not going to get out until 3 o'clock, until, 2 hours, a minimum 2 hours after spread. You've seen what's happened today with that one trade. That spread can be that big going way into the morning. So 4 or 5 hours, you're still getting these massive return on drawdowns, but the drawdown is now more realistic. It's 9%, 14%, 10%. Yeah. So this is probably more like a proper strategy, but it's still getting huge returns. So I think this needs some more analysis. On paper, it seems quite sound, but if you start doing this exit time sort of thing, we're kind of doing the same thing as we're doing with the normal lazy trader strategy, which is basically setting a TP here, but we're just not turning it into a position trade. We're getting out here somewhere regardless, aren't we? But there's going to be more volatility and more volume there. The thing is, with this particular trade that screwed us today, which is the unexpected variable, is it's a pound Swiss pair. Normally, these types of massive spreads you find on New Zealand pairs and Aussie pairs, not on pound Swiss. So this is just broker manipulation. They do not like this type of strategy. So, it's just one of those things, unfortunately. The spread was all the way up there. So you've got to start executing these exits somewhere in the Asian session, but from here onwards. So one of the tests to do with this, I think, with this variation on the strategy, is to start at 4 hours minimum and go up, but don't go into the London session. The other thing you can try and do is put a stop loss on it, obviously. So yeah, I mean, there's lots of things you can do with it, but this was my initial concern with the strategy, was the spread. Yeah, you're trying to make money over the period which is impossible to make money at because there's just too much spread. So this is, kind of hammers it home, doesn't it? But a lot of the time you will get decent ones. Look back here as well. Look, this trade, yeah, we got in there. On the strategy tester, your exit was there. In real life, your exit was there. Yeah, I mean, that's the difference between half of your TP and a break-even trade. It's ridiculous. It's just not executable, unfortunately. So I'm going to give it another couple of days. This is running on a little test account, so I'm not. It's not. This is running on a cent account, so it's not real money. Basically, it is real money. But it's not real money, if you see what I mean. So I'll let it run for a couple more days because I'm also interested to see how much they spread this. Because it's a real money account. It's being traded like a real money account. It's being treated like a real money account. So I'll be interested to see what happens with it. But yeah, but the lazy trader strategy, looking promising. We just need to see how it gets out of these position trades that it's getting into. But if it can continuously start banking sort of a 0.5%, 1% a day on the trades that play out and then manages the positions okay, I think this has got a lot of promise. It's just another position trading strategy, which is great. We know position trading works, but it's a combination hybrid, isn't it? So I think it looks cool, but we'll try it. And my pullback strategy, obviously, this needs more time because this is a multi-day hold strategy. It's not a scalp strategy. It's a stop loss based multi-day swing strategy based on trend. So we need to give this 2 to 3 weeks of trading to actually see some proper results, because some of these trades are going to take days and days to play out. So, but there you go. So that's an update on the testing so far. Did I look into the bid-ask price logic for the lazy EA? Yeah, it's all fine. It doesn't use it. I posted that. Did you probably missed it, maybe? I posted the explanation of that in the group. Yeah, I'll post a link here. Go and read that when you get a chance. But the the logic, basically, just to explain it, the logic doesn't work on bid ask. It works on wick distance. So bid ask doesn't come into the equation. It's candle close. What is the distance of wick? It works on wick size, doesn't it? Yeah. So doesn't come into the. It's not. There's no problem with it. Morning was check. What happens if you remove stop loss during high spread times? There's no stop loss on that strategy. Doesn't use a stop. Timed exit. So there is no stop. That's not a stop loss being triggered. That is us saying, all this strategy does is say, get in at 9 o'clock, get out 2 hours later. 2 hours later, the candle was here and it said, close my order, please. The bid was there. The ask was there. That's where they closed the order. That was the spread at that candle. Yeah, it's not a stop loss. It's just basically me saying close at market. That was the market price they offered. That was the market price you got in the strategy tester, which was a profitable trade. What you actually got was an entire wipeout of your entire day's profits. Crux. That's why I was thinking of adding a parameter to not take profits during 0 to 1 because of that, to eliminate these results from the back tester. Yeah, so I think this is your job, Vitaly. Go and rerun all your tests. But the entry, so if you look at the entries that we've had on these trades, so there's a couple of, there's multiple entries on this one. So the entry, so that's the close price of the candle. That's the entry. Spot on. That's the close price of the candle. Just want to see what you can see. That's the close price of the candle. That's the entry. So the entry here and the entry here is pretty much spot on what you would get in back testing. There's another one up here, look. Yeah, so close price of the candle, entry. So the entry at this time of day is not a problem. The exit is the problem. This is the Asian session. There is no volume happening there. This is where your big spreads are. So entry, you can keep the same time, but exit has to be, I would say, so we're getting in there. So we're getting out on that candle, aren't we? So 2 hours later, 3, I would say you've got to be looking at 4 hours onwards, but you cannot go beyond, I would say, to be safe, 6 or 7 o'clock broker time, which is, so give it what, 2, so 3, 4, somewhere between 4 to 8. So test 4 to 8 candles exit, 4 to 8 hours exit, and see if it's still profitable. The downside you're going to get is sometimes you're going to get in long here and you're going to catch an Asian move. So this may be that we can't trade the Asian pairs. So this is a type of strategy that probably you might find doesn't work on yens, doesn't work on Aussie, doesn't work on New Zealand very well, because this is when the Aussie New Zealand market moves. This is the Aussie New Zealand session, yen session. Now we get into London. So it might be a case of this needs to be run on CAD, US, pound and euro pairs. Swiss as well, but because those pairs have got low volume, they have slightly higher spread during that session. So again, it's something that you have to forward test, this type of strategy, because it's running overnight. There's all these EAs out there called, the night scalper and stuff. They look great, but when you actually try and trade them, there's one that I found, which I remember, which was, it was based, the logic on it they said, which isn't true, but the logic on it, the sales pitch was, it's a commodity scalper. So all the activity on the commodity pairs happens overnight. So we have high volatility, but low movement. And the commodity exchanges are basically all it was doing was scalping the Aussie dollar CAD, because it's commodity against commodity, during the Asian session. And obviously the Asian session is very range bound on that, usually. But it could never execute the trades. It was trying to scalp sort of I think it was 5 pips or something, or 3 pips out the market every time it got in, which is absolutely achievable in the backtester. But when you've got a 4 pip spread, you can't get 3 pips out, because you've actually got to get 7. You try backtesting it with 7 pips as a scalp, it doesn't make any profit. And this is the same thing. So, but test it. We will have better spread there. That's all you can do. And come back with the results. And then what we'll do is we'll adjust the EA and we'll try it with those new criteria. But I'll leave this running for a few days. It's done 20% of the account already. So chances are by the time you come back to me with the back testing and I set it up, it'll probably blow the account anyway. But anyway, we'll let it go. It's $75. I don't care. It's a good experiment. If we have 4-hour exits, we'll eliminate, a lot of the times, if you look at Quantum Analyzer, profits are taken at 0 exactly. At Quantum Analyzer, what's Quantum Analyzer? Oh, you mean Quant Analyzer, right? Yeah, sorry, Quantum Analyzer. Yeah, Quant Analyzer. Profits are taken at 0. Yeah, so those will be the ones that work, won't they? So. Because what's happening is you've set a TP in the market. Because we've got a fixed TP, if the candle goes your way, obviously it's going to hit that TP. So if you spread massively and the candle ticks up and it slips and it gaps and all the stuff it does overnight in your direction, it's going to hit TP every time. Like I said, we had 6 out of 8 trades hit target. The trouble is, the ones that don't hit target, you're not going to get the right exit. And that's the bit that kills the strategy, is the exit. The exit in loss kills the strategy. And if you implement a stop loss on this, so the other way you can do it is say, right, I'm going short, I'm going to use a fixed stop loss. You'd have asked for a stop there. They wouldn't have given you that stop. You would have still got this. So you can't use a stop loss. Any strategy that operates overnight that uses a stop loss is going to get spread. You'll know this if you've ever used a position trade at EA with an aggressive drawdown control position, which has been held overnight. I've been stopped out on I don't know how many aggressive positions overnight where the price never got anywhere near it because of the spread. So you just got to stop using stops, basically, like I preach all the time. Yeah, stop losses will get stopped out. Their point is to execute a loss on your account. The brokers want that more than anything in the world, and they will do it by hook or crook. Even if you've got a profitable exit, they'll still give you a negative one. Yeah, it's just the way that it works. So the other thing we can do as well, just to throw another spanner in the works, is I could implement a spread filter. So what we could do is implement a spread filter that says do not execute the trades if the spread is greater than X. But what will happen is that spread may not become within that range of X until here. So whatever you do in the strategy tester is never going to be repeatable in real life, which means you can't actually back test it. You can only live forward test it, but it will stop things like this happening. So what would have happened with the spread filter this morning is it would have gone, there we go. There's our exit at 2 o'clock, but the spread is 700. I mean, what was the spread? 36 pips. ADR is 82. Yeah, so this is nearly half an ADR, half of a daily range of movements in spread. Yeah, so you'd have to set a spread filter of 5 pips, maybe. Anything over 5 is just nuts. So, but look at the spread now. Yeah, I mean, the spread now is absolutely fine, totally acceptable. Spread is 17, 1.7 pips. So, yeah, so there's your problem with that one. But it's not something we can get around unless we go out exit. So a spread filter is another option, but do some testing, Vitaly, and come back. And obviously, if you've got something that looks good at later hours, then yeah, we can forward test that. And it wouldn't hurt to put a spread filter in as well, I think, on that. Spreads are coming down roughly at 115. Yeah, see, that's triggering at 1 a.m., isn't it? That exit. So your 2 a.m. exit might be okay, the 3-hour exit. But what you're also giving it is a lot more room to breathe. So what you're doing is you're giving yourself a fixed upside and an unfixed downside. So the trades that go against you are still going to hurt. But if that strike rate is maintained at 70%ish, it'll be all right, probably. So I don't know, needs a bit of work, doesn't it? Morning Forex Fire, how are we doing? So there is data for that on Oanda's website. Oh, is there? Yeah, go and do some research. I'm happy to give it more testing, definitely. Have we been 40 minutes already? Bloody hell. We haven't even started looking at what we're going to look at today. Target hit on DAX. I've got 200 clear profit there. I'm just going to take that, I think, today. We're sitting at yesterday's high, look. So we got yesterday's high rejection. That's yesterday's high. We got a big wick at the top. I'm just going to take that today. Whoops. Close. So 450 banked, 280 hedge. So 160 clear profit this morning. Can't do anything with this today, can you? Upside target, ADR, downside target. Yeah, it's 5R looks good to me. It's ADR to the upside, and it's somewhere around, can't see, somewhere around that low. Here's your downside target, which is on an ADR movement out of it, basically, to make money today. Right, so next strategy, pound yen. So this strategy is the it's one of the transparent traders. So for those of you that don't know the transparent trader, his name is Jared. He's bald. He makes me laugh, but I like what he does because it's very scientific. If you wanted to identify a scientific trader and you needed to get AI to generate a stereotype, that's Jared. He's a bald guy wearing a suit and he looks like a scientist. He's very, very straight down the line, I'd call him. But I like what he does because it's scientific. So this is one of his strategies. He sells courses. Just so you know, everybody else, he sells courses. So he's basically making money out of YouTube revenue and selling you a course. Same as they all are. Say they all are. You're all sitting here in a paid members group. Stereotypical. But I'm charging 30 quid, you know. So it's not, you know, you're not spending 200 quid to find out all this stuff. I'm doing all this testing because I don't believe any of it works long term. And I've back tested loads and loads and loads of his strategies. And a lot of his strategies are based on Larry Williams and Larry Connor's work. So this one, basically what it does is it uses a breakout and it uses the 0 to 4 hour time period. So this is New York time. So what we're doing is we are getting in at the London Open ish. Yeah, this is 9 a.m. UK time. They're 5 hours behind us, right? So this is 9 a.m. UK. If you believe the market opens at 8 or 8:30 as London Open, that's fine, whatever you believe. But the market movement is whenever the market moves. So the banks might open at 8 o'clock. The desks might get people on them at 8 o'clock. But I know for a fact they're sitting around eating donuts, croissants, and drinking coffee for the first hour or so of the day a lot of the time. So the market doesn't move anywhere. So it's basically saying at 9 a.m. when London's going to get some volatility or just about to start or just had some volatility, look at the last 4 hours and make a range. So the Asian session's usually quite quiet, although for some reason he's picked the pound yen. The yen moves in the Asian session. So the strategy to me makes absolutely no sense on the pair. We should be using a pair that doesn't move much in Asia, really, to make a range, not something that does move in Asia. Yeah. I mean, this chart that he uses doesn't make sense. Look at the size of the range. Yeah. Surely you're better to take a range breakout of something that's quite tight, not something that's huge. But anyway, this is the strategy. So basically it trades a 4-hour window, finds the high and the low, and basically you take a breakout long or a breakout short. Simple as that. Yeah. Stop loss is the opposite side, and it's a stop and reverse strategy. So basically you get in, and if that trade doesn't work out, you stop out and you flip short. You stop and you reverse direction. Yeah. And it does this every single day. And that's it. Very simple. Now, he says this is a stop and reverse type strategy, meaning that most of the time your exit from a trade will be the entry in the opposite direction. So I've interpreted this as, if I get in long and I am long and going long, and the next day I'm still long, what I have to do is the next day I have to choose that range again and enter a short sell order, because I cannot stop and reverse if I do not have a pending sell order to stop and reverse on. So my interpretation of this is, we take a trade, either long or short or both, and if we take both, that's it, we're done for the day, we've made the double loss. But when we break out, the next day I need to place a new order. If that order then triggers short, I stop out of my long, take the profit and flip short. But then what do I do about the opposite side? I have to have a pending order in place. Yeah. So do I place one today when I trigger that short, if I trigger that short, or do I wait to the next day to place another pending because I've got a stop loss in place at the opposite side of the range? So there's no clear rules with this. There's many ways you could interpret this stop and reverse type exit. So I've built out what I think he means, which I'll show you, is this. And I've done this on the pound yen. I'm using every tick. It uses an hourly time frame, which makes sense. So the entry criteria are, so I'm using 10 a.m. at the moment on this, which is 8 a.m. UK time, not 9. To be honest, it doesn't matter what time period you pick. If you use 8, 9, 10 or 11, what you're doing is you're saying, give me a 4-hour range and get me in. Yeah. The time is irrelevant. Now, the fact that he said it must be at 4 a.m. is, again, nonsensical, because the market doesn't open at 4 a.m. The market opens at midnight on Sunday, and it closes at midnight on Friday. There is no open. It's a 24/5 system in forex. There isn't an opening time. Banks in the UK open at 8 a.m. but like I said, the volatility doesn't start at 8 a.m. so I chose 10 because for me that's more sensible. That's 8 o'clock in the morning. That's when the FTSE opens and the DAX opens. That's when the volatility comes into the stock market. So I think there's more chance of actually getting movement starting there, i.e. a range break, than there is of doing it at 9 o'clock in the morning, which is an hour before the market opens, which doesn't make sense. So I picked that. But to me, that is a variable. You can try all the different variations of it, and I think you probably get similar results, because what we're saying is, at a period of time in the morning, somewhere around volatility, give me a 4-hour range and go long or short. If we move, that's it. That's the strategy. So at 10 a.m. it goes, show me the last 4-hour candles, 4 hours worth of candles, and then place a range and go for it. Right. So we'll trade it, and I'll show you it in action. But you know, this is my interpretation of it. Yeah. Whether it's the right or wrong interpretation, I don't know. We'll find out. But so there we go. Let's zoom in on that. So this is the 10 a.m. candle. Yeah. So what it's done is it said, give me a 4-hour range. Why is that triggered all the way up there? Oh yeah, sorry. What? Why is that triggered all the way back there? Let me just let that play out so I can see where the lines are drawn. One sec. Right, okay. So bear with me a sec. I just want to see what the logic is doing. Yeah. So we're taking that range. We're taking a break. What I'm doing, and I don't know whether this is right or wrong because he hasn't said, but what I'm doing is when we trigger a short order, if we stop out, so you see we went long there, yeah, the next day we placed a short pending order which triggered. So when we placed that pending order short, we needed to have a pending order long placed so that we could get out, yeah, in the opposite direction, right? Now when I go long, I have to have a sell order placed on the opposite side so that I can get out of this long. Because if it's a stop and reverse strategy, what you could do if you don't have a pending order the other way is you could trigger a long and then it could collapse 4 ADR. You'll never get out. You're stuck. So my interpretation of it and the way I've coded it is every time you get an order in one direction, you have to place another order in the opposite direction on that range size to be able to stop and reverse the strategy. Yeah. So that's basically all it's doing is it's going long, and as soon as it gets a signal the other way, it gets out that long or that short and gets in the opposite direction. Yeah. So it's got a TP as well. Now his TP, again, it's totally nonsensical. And again, this is cherry picked. You know, when you do back testing, you go, oh, wow, look, that makes 700 million. He's picked the best possible. 150 pips. First of all, you can't use pips because the range of an instrument is dynamic. So over a 11-year, or in this case, a 13-year test period, 150 pips some days is a quarter of an ADR. 150 pips other days is 1.5 ADR. Yeah, you can't pick pips because the thing doesn't move in the same amount of distance every day. So I've used ADR as a kind of a stop based sort of strategy, and the TP I've put on it is kind of he's chosen 470 again, which makes no sense. So I've gone with, I can't remember what I went with in the end. I think I went with a 4 and a 1. Let me just look. Yeah, so I went with 1 ADR as a stop and 4 ADR as a TP. The thing is, the stop very rarely ever gets hit. Because it's a stop and reverse strategy, you don't get to your stop loss because your stop loss is always further away than the reverse. So it doesn't really make sense. But the TP I picked at 4R. Yeah, so as you can see, it works quite nicely. It's very, 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 very choppy. But if I take off the visual mode and we just put it into graph mode so we can see it trading, you'll see that the P&L actually is pretty nice. So I did a screenshot yesterday in Discord of his results. Okay, so this is 2011. So I'm testing from 2011 to date. He tested from 2011 to 2020, February. That's where COVID hit, right? That's COVID. Literally, that's COVID. So this was, and this is the other thing I like about Jared. He knows about in-sample and out-of-sample testing. So he's doing it all right. That's his in-sample development, and that's his out-of-sample results. So the strategy worked nicely in sample, and it worked nicely out of sample. Then COVID hit and the entire world went nuts. Yeah. So this is the results that I got from my back test. Yeah. So obviously my equity curve is nothing like his. And this is a back test for, what are we on now? 13 years. Yeah. Yes, it's got a nice equity curve, but it's also got years and years of stagnation where it just doesn't make money. And I'm talking years. Yeah, I haven't put this into Quant Analyzer yet. In fact, if I can run this test, we can run it in Quant Analyzer and look at the stagnation periods. But it's got some beautiful run-ups where it makes a nice profit. And to be honest, the last 4 years post-COVID, it's not bad. But look at the stagnation. So this strategy seems good on paper, and the equity curve looks lovely, as long as you're happy not to pay yourself for around about 6 years. Are you? I'm not. So it's a great strategy for investment. I think it's got legs, and we can test this on other pairs. The fact that he's using this on the pound yen is nonsensical to me, because you're creating a 4-hour range in a period where the yen moves. Surely you should be creating a range in a period of stagnation. The whole purpose of range breakouts is you're looking for accumulation breaks, momentum after accumulation. He's choosing a volatile period and then trying to trade a breakout of a volatile period. That just gives you a big range. Maybe the logic behind that is he wants the range to be big so that he doesn't get multiple stop outs. If that's the case, then obviously that logic is sound, but it looks okay. But this is my interpretation of the strategy, and I don't even know if it's right, because there's a lot of ways you can interpret it. But as you can see, it's got a lot of losers as well, where it just will, in periods where the market is accumulating, it's a trend strategy applied to a trend instrument. Obviously, it's a breakout strategy, so it's looking for a trend to form after a break. When you get accumulations, it's going to die. But this is no different to any strategy out there. It's always going to have down periods during accumulation. But, you know, you can see there's a long time. We had a beautiful run up. If you'd have started testing the strategy then, you'd have thought you'd found the Holy Grail. But then you lost half your profit and you sat around for X period making nothing. And then you thought you'd found the Holy Grail again. And then for 3 times longer than you had the run up, you were sitting there hemorrhaging cash. If you start trading this here, you're going to chuck it within a week, a month, a quarter. You're just going to chuck it. So it's something that is robust over a decade of pre-pandemic trading, and out of sample seems to be good post-pandemic. So in sample, out of sample, out of sample, if you like, because we're testing now what's happened since Jared did his testing, which used in sample and out sample testing. So it does look pretty robust. But for me, it's the sort of strategy I would want to put on a 401k or on a pension and sit there and hope in a decade we've increased our account balance, which you will have substantially. This is a 10k account. We're sitting at 92. So it's returning a very, very nice, healthy annual return. But here's the caveat. The annual return is less than the S&P 500. If you bought the S&P 500 every year for the last decade, you'd be on more money. So it's good, but it's no different to what Warren Buffett's been doing all of his life, which is buying the S&P. So you could run this strategy probably on the stock market and get very, very similar results, but it's a massive long burner. So on a 10k account, it does nothing but run up. But it does have rundown periods. And those rundown periods, if you started with a 10k account, for example, we are, let me just slow this a minute. Oh, I can't because it's not on visual. I can't actually see what the profit is there. So we're on 38k there. We drew down to 25. So you're looking at somewhere in the region of a 13k drawdown. So I started this on a 10k account. Luckily, it ran up. If I'd have started it on a 10k account from that time period, you'd see this blow in the account. It would blow the strategy test. Yeah. So it's all right, but it's not something, you know, when you see an equity curve like this, people are like, wow. But when you actually think about it, from that trade there, which was trade 466, until this trade here, which was trade 1032, so 466, somewhere around here. So from somewhere around about March 2012 until somewhere around September 2012, we didn't make any money. Yeah. So you sat there for 6 months and did nothing but lose, and then regain, and then stagnate, and then lose, and then regain, and then stagnate. And then there, 6 months you sat through this. it then started to make a new high. So it's all right, isn't it? But it's not, for me, setting the world on fire. So it's a good long burner, if you like. So if you want to develop a portfolio type approach where you're creating a pension fund, sticking 20 grand in there and setting a load of strategies for long-term gain in 10 to 20 years time, looks good. Which is nothing wrong with that. But it's one of those strategies, I think, that's just not going to work particularly well from an intraday or a month by month trading system. So, but it takes a long. I'm doing this on tick level as well because I wanted to be super convinced that this was right. Because it uses any strategy that uses pending orders, you cannot use on control points or open price because the calculations won't work. Every strategy that uses pending orders has to be tested on tick level. Back to life, you just have to do it. And obviously, testing takes 100 times longer on tick level. So, but I'll let that trade run out, and we'll try and get these results out into Quant Analyzer. We'll have a look at them. This looks similar to Rene Bulk on YouTube, range breakout strategy he uses for FX breakout EA. Don't know. I've seen some of Rene's stuff. But again, I say this with the greatest respect. He's a great coder. Yeah, but his business model is you signing up to his brokerage. He gives you all of his EAs for free, but you have to sign up for his brokerage. Therefore, every time you put an EA on his brokerage, he gets paid a lot of money. Yeah, he gets a lot of views on YouTube, a lot of revenue. Yeah, so I'm just super skeptical about everybody. But anyway, I don't know what his strategy is on that. So it also seems to go from like 39 to 25. Yeah, so that's what I mean. It's a burner. It's a long burner. It's an investment strategy, which you'll find most day strategies are. But this is again, this is the thing. My interpretation of it, the fact that he says it's a stop and reverse strategy means that I have to have a opposite order to be able to stop and reverse. I don't know whether it's right to continuously place orders in the market every time one gets triggered as a stop. An opposite side of range, because it's not explained in any detail, but that's what my equity curve looks like with what I've generated. But sitting through this is just not my idea of fun at all. You're always going to get stagnation in any strategy, but this seems incredibly painful to me. So there may be ways that this could be tweaked, but I don't know. But I'll let that run. Are you also planning to test the monthly reversal one? At some point, yeah. But again, yeah. I mean, I can test that. I'm going to be building an EA for as well for DAX trading. So somebody asked me. It's actually not one of the members. It's somebody else in the Discord group. If I had statistics on DAX movement. Because they want, and actually not just DAX, but index movement. So again, another one of the EAs I've got bubbling. I have loads of EAs bubbling around, which I kind of pick up and put down every now and again. One of the EAs I've got built is, I can't remember what I called it. I think I come up with these weird names for things just to remind me what they are. I think I called it DAX Stat. And basically what it does is it allows you to trade anything on the DAX. So you can say, get me in at 11:30 and hold it for the day. Or get me in at 11:30 and show me what would happen if I got out between 1 and 7 hours after I entered. And use a stop loss somewhere between da-da-da-da. So it basically it will spit out statistics. There's a site called Edge... what's it called? Edge. It's here. No, it's not that. It's Edge Finder or something. I don't know. But also that gives you statistics, but it gives you too much information. It's not not something you can really use. But I've got another EA that I've got that does that, so I can build into that the monthly reversal strategy type thing, and you can trade it on anything basically, but it's kind of something I can add into the Swiss Army knife. By the way, somebody mentioned to me the fact that my Swiss Army knife is SAN and knife begins with a K. I am aware of that. I don't know why I called it SAN, but Swiss Army knife, I know knife begins with a K. I don't know why I put SAN, I just did. So someone pointed that out to me. I just thought I'd point out that for anybody else that hasn't noticed that the EAs I've been putting out there are SAN whatever. Nobody's realised that it should be SAK. But then I thought if I called it the SAC EA, it sounds a bit weird. So anyway, have I tried it on other pairs? I haven't tried this on other pairs, no. I'm just going to let this test run, and then we can run it on another pair. But what I think you will find is you'll get correlation, because the way this is trading is based on yen. I don't know why it's pound yen as well. And this is the other stuff I don't like about Jared's stuff. Every strategy he does, and he has always done, has been, this is a strategy for the euro pound. Well, if it's a strategy that works, it should work on other instruments, because there's plenty of stuff that moves like the euro pound, but it doesn't. And this is the strategy for the pound yen. If I try this on the US yen, or I try this specifically on the euro yen, which has the same European currency open, DAX and the FTSE open at the same time, the pound and the euro move at the same time. So surely if the pound yen moves, the euro yen should move. If I try this on the euro yen and it produces a negative equity curve, I'm immediately throwing it away because it's curve fit. And this is the problem, I think, with a lot of Jared's stuff, unfortunately. It's curve fit to single instrument. And I don't think that's the way to go. I do understand that different instruments have their own personalities and will operate in a different way intraday. However, if a strategy is good and has good risk management, it should work on multiple instruments. Position trading is a risk profile methodology. That works on anything that moves, really. Some stuff it doesn't work as well on, that trends hard. So we ignore the trending pairs, but there's not one trending pair. We don't just not trade the US dollar Swiss. We don't trade any Swiss or any yen, but it works on everything else. And his stuff only works on one thing. He's got strategies that this is a strategy for the euro yen. Well, why does the pound yen one not work on it, Jared? Yeah, it all seems very curve fit. I love the fact that he robustness tests it and out of sample tests it, but he only robustness tests usually one specific thing. And for me, it's just not enough. So, but this, as I said, I am out of sample testing this because his video is 4 years old. He did in sample and out of sample, finished before COVID. I'm testing after COVID and it's still working. So, but if you want to, it's in the Discord group anyway. So it's this PDF. If you want to go and watch his video on it, it's here. But you will go down a rabbit hole with Jared because he'll give you basically individual strategies for individual instruments. And when I've tested them, I do get very different results. And I think there's a lot of discretion involved in this. Although he gives specific rules on a lot of stuff, he then shows you various exits and various ways to get out of them. And I don't know. But, you know, the profitability here is pretty good. So, but yeah, well, I'm just filling, basically waiting for this strategy to finish this test, which is a while. So I've got another EA that I've built. And as Mark's just said, it's probably very similar to what that guy on YouTube's done. It's a range break EA that can be used on any instrument. And it's basically time-based entry, time-based range entry, just taking single trades a day. So I'm going to look at developing that and see if we can come up with some strategy ideas for that, because it's based around this strategy as well, the London breakout strategy. But in forex, I don't believe that you can use the London breakout strategy, and it only is given out for forex, because they say that you should be trading the London Open. But you know, if you go and look at a chart, we got an AWR on US dollar Swiss. Looks like the US dollar's pushing back up at that level on the US dollar Swiss. So weekly range hit on the US dollar Swiss. What's the other US pairs doing? US dollar CAD coming down. So this is Swiss franc weakness we've got coming in this morning. So Aussie dollar Swiss pushing for the last 4 hours or so. Euro Swiss. It's not really pounds, it's Swiss franc, is it? It's just US dollar Swiss just pushing. Weird. Don't know why US dollar Swiss is pushing so much. It's just having a little bit of a rally, but yeah, if you look at any single day, and when the market starts to move, if I just zoom out on this, let's use the pound US. Actually, let's use the pound yen, because that's the one that he was using. So the market, you know, when you just look at a chart and say, right, the market started moving there, didn't it? That was at 3:15. I can't really pick a time there where this thing started to move. Yeah. Here, it started to move at 10:30 in the morning. So I would class that move there as it starting to move. But look at it here. That's during the Asian session. Yeah. So if you go back, every single day, this started to move at 1 a.m. and then it sat around. This day, I'd say it started to move at 9:30. The other day, it started to move at 10:30. Yeah. Just trying to pick something. So here, 9:45 stroke 10 o'clock. So far, we've had a 9:30, a 10 o'clock, and a 10:30. Do you see what I mean? There is no open. There is a rough period in the morning when the banks start to execute orders. You can't pick a specific time and say, put a range on it. This is why this strategy is so unreliable, London breakout, because you get a lot of whipsaw for an hour and a half, and then the market will move at 11:15. Yeah, so the London breakout doesn't work, because unless you know when the breakout's going to come, it's going to whipsaw you, which is why we use indices for this particular type of strategy, because we know this every day without fail is when it's going to move. We have a specific time. 4R on the DAX. I should have held that. I was waffling and wasn't concentrating, so I didn't want to sit here and let all the profit go away. But yeah, 4R today on the DAX. So yeah, if you look at other things like the pound US, see the pound US that day started to move at 1 o'clock in the morning. But that's what I would class as the open. That's 2 o'clock. That's the afternoon the pound US started to move. But you could say it started to move there, which is 4 o'clock in the morning. Yeah, you could say it started to move there, which is 9:15 in the morning. That day, I would say probably around about here somewhere. So somewhere around about 8:30 or 9 o'clock, it started to move. Yeah, this day, hard to pick an open, but you know, look at the candle sizes. It started getting volatile there, didn't it? 9:45. Totally random. It's just not, you know, from a forex perspective, you cannot pick a time of day. It's going to be around about a 2-hour window. That day, it started at 8:45 in the morning, which is actually 2 hours ahead here. So this is 6:45 a.m. UK time. Banks open in an hour and a quarter, but the market had already started moving before they even got to their desks, because the Asian session was executing orders to pass on to London. You know, so you can't really rely on any strategy. These is time-based things. But you know, let me just get these results out. So there's your graph for the pound yen. So I'll get these results out and we'll stick them in Quant Analyzer and see what they are like. And while we're doing that, I'll run a quick test on euro yen just to see if we get a similar equity curve. Okay, so nice and profitable. So $83,000 profit, starting off with a 10K balance. Drawdown 11.7%. As we said, we drew down from 30 odd to 20 something, didn't we? So that's all in line. Winning percentage 38%. It's a breakout strategy. It's always going to be below 50. Profit factor 1.13. Shocking. But return on drawdown, that is the bit that is, you remember I said when we were looking at Vitali's spreadsheet, yeah, 4 is healthy. Anything above 4 is a really good return on drawdown. So if your return is 83 on a drawdown of 15, that's a good factor. That's really good. So yeah, return on drawdown factor, nice. Anything above 2, I start to consider. Anything above 4, it's a no-brainer. It's going to work. But you need to look at the monthly returns, yeah? Look at how many losing months it has. So in total, you've got 1, 2, 3. That's the first year, so we'll discount that. So we've got 3 years there that were losing years. So it lost 114, not a lot. Lost $1,000, lost 1,600. Yeah. The rest of the years, we've got a 15 grand year, an 8 grand, a 3 grand, a 4 grand, 200, 30 grand, outlier. 6 grand, 13 grand, 3. So overall, year by year, it's giving you a positive return. Think pension fund. Your pension fund doesn't make money every year. This doesn't make money every year. The S&P doesn't make money every year. This doesn't make money every year. It's a great investment strategy. So yeah, really, really good. If we have a look at the trade analysis on it, the 4-day holds is where you make your profit. So anything that is a breakout that fails doesn't make money. Anything that's a breakout and hold and hits TP does. No surprise there. Doesn't work very well on Fridays. Other than that, look at that. Now this is the big alarm bell for me. There's an absolute massive outlier. In 2016, for some reason, this thing made 27 grand. The biggest year apart from that is 13. So that year is an outlier. Massive outlier. If you hadn't have been trading in 2016, it's not looking as healthy, is it? So equity chart and stagnation. You stagnated for 829 days. 3 years. 3 years. You didn't make any money. Can you imagine starting this strategy there? You're never going to hold it for 3 years. It's not going to work. So, but if you started it here, you'd be like, woo, this is good. And then you'd be like, oh. Let me just put time on the bottom. So that was from 2018, financial crash, through to 2020, COVID. And funnily enough, post-COVID, it's done a lot better. A lot smoother post-COVID. Market's more contracted. Don't know. Anyway, so there we go. Let's have a quick look at how it's doing on the euro yen. Not bad so far. So I suspect we're going to get something fairly similar because we're in effect trading a yen pair here, aren't we? So I suspect you could probably build a portfolio of yen pairs with this strategy. Stick them all together and you may iron out some of that stagnation that we've got in there and make the stagnation period shorter. Might make the equity curve slightly smoother. So it's something that's worth having a look at to see if it irons out this hideous monthly thing. I mean, you know, like I said, with strategy hopping is the biggest problem in trading. The reason you strategy hop is because the strategy doesn't work. This thing works. Yeah, it's got a 5.5 return on drawdown ratio. Doesn't get much healthier than that. It works. But you're going to sit there for 4 months just giving your cash to your broker. And then you're going to get a month back and you're going to lose again. And then you're going to get a month back. Then you're going to make a fortune. You're going to make 7 grand. You're going to recover all your losses. And then you're going to lose half of that money again and get it back. And you're going to end up with 2 grand worth of profit. You can't look at this. You've got to put it on a BPS and come back and look at it every 6 to 12 months. If you look at it every day, you're going to pull your hair out, honestly. So it's not an intraday strategy, but we kind of knew that. And what about using a breakout strategy only this 2 hours time filter in the morning? What do you mean by that? I don't know. Do you mean on this strategy, just picking a 2 hour? I don't know. You just get a different breakouts, wouldn't you? The thing with breakout strategies, yeah, breakout strategies are very, very, very simple. This is a breakout strategy. The stock index hedge opening range breakout strategy is my preferred one, which is why I trade it. Yeah. It either works or it doesn't. It doesn't matter whether you pick a 2 hour period, a 4 hour period, a 6 hour period, or a 12 hour period. What you're doing is you're picking a period and you're saying, give me the high, give me the low, and wait until we break. If it goes off higher for a few days, I'll make money. If it doesn't, I won't. That is a breakout strategy. Breakout strategies do not work in ranges. Yeah. Breakout strategies do not work in trends. Breakout strategies are the start of a trend and you have to hold them to make money with them. The strike rate is therefore somewhere between 35 to 50% with a breakout strategy. This one is 38. Yeah. So trend strategies somewhere between 30 to 35. Breakout strategies 35 to 50. Mean reversion strategies 60 plus. Yeah, that's what strike rates are. Doesn't matter which one you pick. You can give me any strategy under the sun and it falls into breakout, trend, or mean reversion. There's only 3 strategies. We've done a session on this already. There's only 3 strategies that exist. This is a breakout strategy. Yeah, this is a breakout strategy. Yeah, it's the same thing. I could choose, instead of choosing this range today, I could have chosen that range today and I've got the same result. It did. Yeah, that's what breakouts are. So it doesn't matter what range you decide to pick. It either breaks out with momentum and continues to make money, or it doesn't. There is nothing else. There are better times to use for breakouts, potentially. So we know that Asia is usually quiet, but it's not quiet on yen pairs. So in Asia, if you use an Asian-based instrument like the yen, Aussie, or New Zealand, you're going to get a wider range, whatever period you pick, because it's moving. If you pick the euro pound during the Asian range, you'll get a very tight range. So your decision-making process is really, which instrument shall I pick over which time period? Because that's going to define my range size. But it will either go or it won't. That's it. They're very, very binary. The market's binary, obviously, as we know. So you could try it over a period of 2 hours. You just get a different result. But it either will break out of that 2 hour range and go, or it won't. So, but you see how long this takes to test. Anything you use with a pending order, you've got to do it on tick. So testing range breakout strategies is like pulling teeth, unfortunately. You can test them on control points and you will get a similar result. Let me just, I mean, this is working all right on the euro pound. Let me just stop that. Won't do the full test. So it's made 37 grand off a 14 grand drawdown. So it's, I would say that's probably on its way to doing very much the same as the pound version of it. If I stick this back on the pound yen and we stick it on control points, you'll get similar results. Obviously the test will take minutes. There we go. You'll get similar results a lot of the time. In fact, you don't with this one, look. But they will be out by quite a range. This is massively different, look. There you go. So this blew the account. Difference between tick level testing and control point testing with pending orders. You can't do it. I don't think we covered this actually in the strategy test sessions we did we? But yeah, something to bear in mind. Always test anyway. So every time I do any test on any EA that I've built, I always test open, control, and tick to see what the variance is. If the variance is less than 10%, I will use the fastest variant that I can test with, because the whole thing is about speed of test. So you cannot use, but with pending orders, because what happens with control points, for those of you that may not know, with control points, if you are on a hourly time frame, yeah, control point testing uses the next time frame down and only uses those candlesticks. So if you're testing on an hourly time frame, it's using 30-minute candles to generate your test results. If you're testing on a daily time frame, it's using 4-hour candles to generate your results. So there's 4, 8, 12, 16, 20, 24, 6 candles. Yeah, there's 6 extra variations on results that you've introduced by using control points on a daily test. That throws them out massively. Yeah, if you're testing on a 15-minute time frame, you're testing 5-minute candles with control points. So there's 3 variations you're introducing. With hourly, you're introducing 2 variations because it's using 30-minute time frame. When you're using pending orders, if I have a pending order there and the 30-minute candle does that and then that, it will say no trade. But it did. But that 30-minute candle closed there. That pending order won't be triggered in the strategy test. So you have to use tick, because if it goes above there and comes down, it has to know that that order's triggered, which just makes your testing like pulling teeth, unfortunately. So just bear that in mind. But this London Open one, I can stick it out in the group if you want to test it further. I mean, it's just not for me as a strategy, because of the I'm not looking for strategies that I can put on a pension fund, which is what this is. So, you know, I think most people on the planet would look at that and go, I couldn't take it. I couldn't take the loss. You know, 4 months in a row there, you came out $4,000 up, but for 4 months you lost 1, 2, 3, 4 grand. 40% of your account. Remember what I said, pension funds draw down into their working capital by up to 40% on a regular basis. This is why. Yeah, this is the type of strategy that they will implement. They don't mind. The whole purpose of having capital is to use it to make money. The percentage of your capital that you expend to make money is down to you, isn't it? So if you've got robust strategies that have set criteria and set parameters within them, you can execute them. And if it draws down 20, 30, 40% of the account, and you know that the return is going to be there because of the drawdown, they will do that. Position trading is exactly the same thing. We're using our capital to draw down. Some people aren't comfortable being in 5% of drawdown on their account. It's not for them. But for those of us that are, we know that that 5% is working capital that's going to come back into profit, hopefully. So it's the same sort of thing. It's just not the type of strategy that I can sit through, unfortunately. But it's profitable. So there we go. So that's the results of that test. The other EA that I've got that I'm working on is, I've called it the Anytime Breakout. And it's a variation on that. Yeah. But it uses a similar thing to the opening range breakout or the stock index hedge strategy. So let me just get rid of that. It's that number again. Same number phones me like 2 or 3 times a day. It's got to be a broker. They never leave a message. So basically what this does, this EA that I'm, this is the one that I've been developing. It's basically, I need to put it onto visual mode. It's basically a daily strategy. So let me slow it down. And the reason I resurrected this is, and I've basically put the functionality into the Swiss Army knife, is because it works in very much the same way as the strategy we've just looked at. But all it does is it takes 2 trades a day. Yeah, exactly the same as a stock index hedge. So it's designed to stop you over trading. That's the purpose of it. So all it does is it brackets a range of time. Yep. And it places a stop loss at the opposite side of the range, exactly the same as the opening range breakout strategy. Yeah, so it's very much the same as the ORB strategy, except it only uses 2 trades a day, whereas the ORB strategy will try to get in and recover loss. The ORB strategy is more of a prop strategy because it's trying to hit a target. This is running just to try and make money based on risk reward. So what it does is whatever that stop loss is, it uses a percentage of return on draw, a risk reward ratio. In this case, it's using 1.5. So what it does is it gets a period of time, brackets it. This might be very much the same, Mark, as that one that you just said about that guy. It's a range breakout strategy, so it's probably, there's not many ways you can do a range breakout. So so all it does, you've got that bracket, it's placed a pending order there, it's placed a pending order there, and if it breaks that, it will try and get to that, and if it doesn't, it will go the other way. Yeah, so what we're doing is we're saying try and go that way. If it works, brilliant. If it doesn't, try and go that way. If it works, brilliant. If it doesn't, we're done for the day. Yeah, so it's kind of like the SIH in that it locks in maximum loss. You cannot lose more than X per day. That's it. It's impossible because you're only taking 2 trades and there's fixed risk on both. So either we get the break or we don't. And that's literally all this strategy does. So it works very simply in that the days that we get, and the idea behind this is very similar. The days that we get a break in London, we make money. The days that we don't, we don't. So it's a similar sort of thing, but it's working on the hourly time frame. You could run it on the 30-minute, you could run it on any time frame really, but all it's doing is it's trying to capture price movement and momentum. Yeah. Now the reason I've put this into the Swiss Army knife EA is because I want to, and this is what my original EA was doing. The Swiss Army knife's actually better than the one that I built, which is why I've decided just to pull the functionality out and pop it in here, is I want to test timed exits on this because there's a lot of times you will see breakouts work and then pull back. So I want to test trailing stops on these breakouts. I want to test timed based exits on them. I want to test end of day exits on them. We know that standard risk reward based strategies are very, 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 very hard to make money with, because you will always hit a period where they come back to the 0 point and they are zero sum, because the strike rate will drop and they just don't make money most of the time. So what I want to test is all the other exit criteria we know that make money, which is time-based exits, trailing stop exits, that sort of stuff. So I'm going to do a little bit more work on this EA, and then I can chuck this out to you and say, go off and find some strategies with it. Because I think this is probably, I really want a breakout strategy that is forex based, but it's got to be based on statistics and it can't be based on risk reward. I just don't think it will work. Saying that, yeah, this is what happens when you try and use risk reward with any type of strategy. You're going to get a period where it has a little bit of a run up and then a bit of a down and then a bit of an up, then a bit of a down, and you always end up pretty much where you started. It's just what happens with them. Because the only way to make money, as we covered in that session, is to get something with a higher risk reward than 1 and a strike rate of higher than 50%. Breakout strategies don't have a higher than 50% strike rate. So you've got to use a much bigger risk reward on them, or a much tighter stop, which is something that we can obviously test with this as well. So I'm going to work on this a little bit and try and get a version of this that everybody can use, and then develop some strategies with it basically. But it's come about from obviously what Jared's one was, because that is a nice edge, like I said, but I want something that works on a daily basis. I want to be able to take trades every single day, but not over trade. And this type of thing where you're just taking one trade is great. It works really, really well because it stops the over trading part. So here it's in a short, and it waited for 4 days to take profit. We didn't trade for 4 days because we were in. That's the sort of thing that you need to be concentrating on, because it stops you chopping and chopping and chopping. The days where we do this in a breakout strategy, it's not going to work. So don't do it. Get in and wait. Wait for the conditions to be right, like that. But as you can see, what is also going to happen is you're going to get in and you're going to get out at 1.5 hour. No, get out at 4 hour, 5 hour. Yeah, breakout strategies are designed to be part of the trend process. It's the start of a trend, isn't it? So there's absolutely no point in getting a breakout strategy with a risk reward ratio. That's for mean reversion. You should be using some kind of trailing stop mechanism, high target, or time-based exit. If the breakout works, it's likely to carry on. If it's going to carry on, how many hours should we hold it for, or how many days? Yeah, so that's what I'm going to be testing with this. Just trying to find something breakout. I've got a brilliant mean reversion strategy, and I hate trend strategies. I just really want a decent breakout one, but it's got to be a daily based strategy. So that one I've just tested. I wanted to test because it looked really good on paper, but as you can see, it is really good on paper, but it's not something you can trade daily unless you've got balls of steel and you're happy to take tons and tons and tons of loss. But look at the equity curve on this. Yeah, this is what happens when you use risk reward. Yeah, we're not really up, we're not really down, we're just flopping around because the strike rate's never going to be above 50% on it. So we'd have to use a much bigger risk reward on it to make it profitable. Then your strike rate is going to drop. We did this in the session, didn't we? You know, it's like this is just what happens with these types of strategies. Held that for 5 days and stopped out. Surely it's better to get out after 48 hours. We can test all this. There we go. That's what we want. Lovely. 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 Much better. Cut your losers short, let your winners run. So yeah, I'll work on this, and we'll do a session on this next week in more detail. Anything else you want to discuss? Anything else you want to cover? I've covered everything I think I wanted to cover in this session today. Actually done way more. We're like an hour and a half in, so we spent a long time looking at the other strategies. So if Vitaly can do a bit more on the testing side, I might see if I can do a bit more on the testing side of this as well. Because I think this has got legs. I really do. But it's also very similar to these two, isn't it? And that one we know is doing all right. This one yet to prove itself, but it's a similar strategy. That's going to stop out with a profit by the looks of things. Anybody still there? I hate not knowing who's in it. It's really annoying. Return to origin, look, see? Our strike rate has dropped, but our profitability has risen. Still returns us to the same point, which is where we started. Anybody got anything else to discuss or look at? That's a nice one, look. Look at this. Prime example of that. It's probably going to hit target, but look at that. Beautiful breakout. There's your target. All the way back to where we started. All the way back up near target again. This has taken 5 days. Go on. There we go. I might have just found the Holy Grail, everybody. Look. It's working. All I've done is go for a 2.5 hour on a breakout at random at 10 o'clock in the morning. Doesn't get any more random than that, does it? Might run a test on that. Right, I'll leave it there for today. Tomorrow I'm back in the morning, so we got a just open session tomorrow. So if there's anything we cover, if any of you guys get back to me with anything today to cover, might do it in tomorrow's session, just with everybody as well. But yeah, well, I'm going to be working on this this EA and obviously the forward testing. If we can get something decent with breakouts that works intraday on FX. So if you've got any other variations on breakout strategies that use time, all ears. But I'm planning to use this to develop and do some back testing so that we can do some robustness testing on it, because obviously this Swiss Army knife has got all the exit criteria we need in there. All we've got to do is try and find a decent entry time, basically. So, but if you've got any other breakout type strategy variations that you've come across, I'm all ears, because I can build them in to test those as well. But this is what I'm planning to do next week, is try and get something into forward testing with this. I might have just found it, to be honest. Stagnation for a bit, but nice run up. But yeah. Okay, anybody still here? Put your hand up if you are. If you're not, I assume you've gone. If you're watching on replay, make sure you leave a comment in the section below if you've got any questions on what has been covered. And let me know in Discord if you do want to have a copy of that EA for testing purposes, the one that I've just shown you today to develop. Because if you want to do some more testing on it to try and build a portfolio long term, then I can stick it out there for testing purposes and see where we go from there with it, really. But yeah, that's good. All right, so have a good day, everybody. If you need anything, I'll be in Discord. Other than that, I will be back tomorrow morning. I'll see you then.